Ladies and gentlemen, boys and girls, and children of all ages, let's talk about what we're going to talk about before we jump into it. Inflation is rising. We're going to talk about today inflation rising and assets that are going to benefit the most. So today, ladies and gentlemen, we're going to talk about what is inflation, what is and why the CPIA is important, the CPIA and interest rates, stocks that are going to benefit and get hurt by inflation. We're going to look at houses and land, and also we're going to be talking about precious metals. So, ladies and gentlemen, if you haven't done so already, you got to know what's going on. We're going to go over reports that have came out by the Bureau of Labor Statistics that is pointing towards inflation. What is inflation? What caused it? All that good stuff. And how to invest. What should investors be looking at? If you're catching this live, don't forget to tell me where you're from. This is a midnight show, the most random show you're going to find out there on the East Coast. I think it's like 1 o'clock in the morning. Out here in the Colorado mountains is about 11:30 at night, completely random, and I feel like doing it, and we're going to do it. Been gone for a little while, but now I'm back. Now we're going to have a very interesting night. Chime in. Well, ladies and gentlemen, if you haven't done so already, go ahead and make sure. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live, all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Ladies and gentlemen, if you haven't done so already, go ahead and make sure you chime in. Today, we're going to be coming from the Bureau of Labor Statistics. The first question of the day is, what is inflation? If you are tuning in and you are actively, I don't know, on your phone or something, you can chime in as well. If you're catching the playback, if you're somebody who just likes to sit back and hit the, if you're somebody who likes to sit back and listen to everything, then that's fine. Okay, so anyway, what is inflation? And inflation is the price of goods and services that rise over time. If you really tune into the show, you probably heard me say this a million times, and that a million times is, let's see 1 second here. What's going on, Al? What you doing up this late, Al? Al is a night owl. He's out here tuning into the show. But anyway, ladies and gentlemen, what is inflation? Inflation is the price of goods and services going up over time. And I like to equate this. Remember, your grandparents used to always say, oh, when I was young, a can of Coca-Cola used to cost 2 pennies. Now they cost $2, whatever. Oh, gas prices was 5 cents a gallon, and now gas is like $3. Oh, when we used to buy a candy bar, it was 2 cents. All that type of stuff. And you're looking at today, why is it costing so much, or what is changing the price? That's inflation. When you look at rent every year, if you're renting an apartment or you're renting a house or whatever, you notice they want to go up on the price. Why do they want to go up on the price, ladies and gentlemen? Inflation, the price of goods and services that go up over time. Things just cost more naturally. Now, we like to keep an eye on this as an investor, because why is this very important? I have to tell you what inflation is in the beginning. Now we're going to talk about what is inflation and why is it important. CPI. So now we're going to go to CPI. CPI is a consumer price index. Again, that is the consumer price index. The consumer price index, aka, is pretty much inflation. And this is just talking about how much customers are putting out on money or whatever, right? And why is this very important? This is very important because you don't want to have too much inflation where prices are just going up. And as inflation goes, that means your dollar is worthless. Right? Because what good is $1 million if it costs $100,000 to buy a loaf of bread? So you don't want you want inflation to gradually go up over time, but you don't want too much inflation, which is hyperinflation, and you don't want not enough inflation where you have de-inflation. I think it's called de-inflation. So you don't want to have hyperinflation. You want to have you want to have it kind of like gliding right there in the middle, steadily going up. The Federal Reserve has came out, Mr. Jerome Powell, who's the Fed chair, and this is one of the indicators that he pays attention to very, very much. Because why? Why are we worried about inflation? Why is this so important? What just happened in the last year? We just dumped trillions of dollars. Many people that's tuned into the show, watch this show, we've dumped millions of dollars into the economy. Trillions, I meant to say, like trillions. We had a stimulus package of 1.9 trillion. I think Trump did one or two packages, and Biden did one. At least Biden has done one so far. President Biden has done one so far. President Trump, I think, did two, if I'm not mistaken, worth trillions and trillions of dollars. Money just got pushed out. We turned on the money machine, and we just shot out money, just went into the economy. People got some money. Money went to research. Money went here. Money went there. Money got lost. Typical government. Typical government programs. Money, billions, trillions of dollars just got thrown into the economy. People sitting at home got unemployment. Some people got stimulus packages. Companies got PPP loans. Some people scammed PPP loans and took a bunch of money for themselves and brought stuff or whatever. Now, on top of that, what did we do to stimulate the economy? We pushed a bunch of money. We pushed trillions of dollars into our economy. And that money has to go somewhere. It's going somewhere. It's going to savings accounts. People are going to go on cruises. Some people are going to invest money. Some of that money has pushed into the stock market. Some of that money has gone into, fast food, whatever. Money has gone out into the economy. Money has to go somewhere. Keep that in mind. Number two, what did the Federal Reserve also do? They also lowered interest rates. What do you mean by lowering interest rates? The government always lowers interest. The Federal Reserve, Jerome Powell, the chair, he lowered interest rates. What do you mean? Why you lower interest rate? Lower interest rates mean a way to make money cheap and expensive to get. It's a tactic they use to stimulate the economy, right? So now, here we go again. That's my guy right here. I get a round of applause for Keith Reynolds. What you doing? What's going on, Keith? That's my guy right there, Keith. He said, I called the show the most random show. We got my guy Keith. He's a night owl. I don't know. I think Keith is in California, I think. But anyway, let's keep going. So we have lower interest rates that was made to stimulate the economy, make money cheap. And then we dumped out trillions of dollars into the economy. What's going on, Keith? He said, what's up? What's up? What's up, brother? What's up, Keith? Nice to see you, man. I knew it. California. See, I remember the Bay Area. Go and give it up for the Bay Area. The Bay Area is in here for the very late random show. So anyway, ladies and gentlemen, back to the point. We talked about what inflation was. Now we're on to the point of the government. Why is inflation of concern? We pump trillions of dollars into the economy. On top of pumping trillions of dollars into the economy, we have also lowered interest rates. Interest rates are at an all-time low. Very good. This is to make people want to buy, make money cheap to get, make banks want to lend money, right? So the Federal Reserve have all type of tools. And one of the tools is to lower interest rates. They can lower the money it requires banks to hold overnight, things like that. But anyway, it also allowed people to go into their IRAs, their 401ks, and just pull money out, tax-free, penalty-free, and go buy whatever they want to buy. So you have all this money that's slushed around the economy, trillions and trillions of dollars being pushed out in less than 12 months at the lowest interest rates you have ever seen. You're seeing houses. I know people who have houses getting interest rates as low as 2%. This pushed people to buy. Well, all of this money. Well, guess what happens, ladies and gentlemen? When you have let's go back to supply and demand. I wish I had a little white chalkboard here. Let's go back to supply and demand. Remember in economics, they said, hey, when supply goes up, demand goes down. What happens when demand goes down and supply goes up? What's happening? And we're all trying to fight for the equilibrium, right? This is we got Dalen Brown. What's going on? Dalen Brown said up late on the East Coast. Okay, East Coast is in the building. All right, give it up for the East Coast. All right. Dalen Brown, thanks for checking out the late random show. Right? He put a fire. What's going on? Thanks for tuning in. We got the East Coast and we got the West Coast and whoever else out there in the middle. So anyway, ladies and gentlemen, here I am in the Rocky Mountains and you guys in the Bay Area. I got to say, Keith, I don't know how you live out in the Bay Area. Y'all prices are ridiculous. I think an average house costs $1 million out there. I don't even think it's a house. I think for $1 million, you might get a 1-bedroom condo, right? That's inflation, ladies and gentlemen. Oh, okay. We got Chicago in the building. Julian Shark, Chicago is in the building. All right. Okay. All right. Chicago in here. Okay. We got Chicago. We got Chicago. We got the Bay Area and we got the East Coast up late night The most random show. Anyway, ladies and gentlemen, let's go back to it. What did we just say? So we pump trillions of dollars of stimulus packages into the economy. We have very low interest rates. Now, demand, when people have money, the demand for products, goods, and services start to increase. So when you have people wanting to buy more and the supply is staying the same, what is that going to do to prices? When demand increases, supply stays the same, what happens to prices? One more time. Since people have money, when people have money, their desire and their demand for goods and services increases. Right? When people want more things, when people have more money, the demand, you're like, you know what? Since I have a lot of money, you know what? I always wanted to get an electric lawnmower. I always wanted to get my house painted. You know what? I always wanted to get that car. Or you know what? I want to get XYZ. But when your money is low and your money is looking a little funny, your demand for certain things, I don't know what? I don't really need another suit. I don't really need another pair of shoes. These jeans can take me a little longer when your money is funny. But when your money is right, what do? You start doing spring cleaning. Oh, let me look at me with this old plaid looking shirt on. I don't know where I got this thing from, right? Midnight, here I am in this little old looking plaid shirt. I might look at this. Oh, my money's looking right. Let me go ahead and update this shirt real quick. You know what? I need all new shirts. You know what? I need a stylist when your money is right. So what this means is that the demand for goods and services increase. People have money, stimulating people. Unemployment prices. I mean, they're just giving out unemployment. They're giving out PPP loans, and they're also giving out unemployment. They're giving out PPP loans, and what they're doing? Unemployment, PPP loan, and stimulus checks. Stimulus checks, unemployment, PPP loans are just thrown into people, and then people demand for goods and services and stuff starts to increase. Now that you have this increase into things, supply stays the same. What is going to happen to prices? Right? Oh my God. Keith Reynolds said, my next door neighbor went for 1.2 million 2 months ago. He said their house went for 1.2 million. That is crazy, right? That is crazy. San Francisco. And I bet you the house probably looks regular. You know, it's probably nothing spectacular about it. You think a $1.2 million house out here in Denver area would probably, it'll look like a mansion. You know, you have like your little mini mansion almost. You have a ranch almost. You go to the south, look where you'll be at. You know? We got someone on Twitch. His name is D Jackson. What's going on, D Jackson? Look, that is crazy. He said it was for 1,200 square feet in the Bay Area. A house went for 1.2 million. That is crazy. I want to say out here where I live, for half of that, for about $500,000, you're going to get 2,800 square feet at least, double what, and that's crazy. So you're going to get more. I don't, like I said, the Bay Area, y'all on your own. Whew. That's crazy. So anyway, ladies and gentlemen, now you got all of this. Is why CPI is important, because guess what? People, when you have all of this money that we pumped into the economy, everybody wants to go up, you know, making prices go up, right? Now let's get to it. Let's get to the next topic. CPI and inflation. I'm sorry, CPI and interest rates. Now, CPI is Consumer Price Index. Consumer Price Index, we just talked about it, which is code word for inflation. The price of goods and services going up, 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 up. For prime example, a lot of people are from the Bay Area or California areas are moving over to not the Midwest, but moving over to places like Colorado, middle of America, because Colorado is very heavily influenced by the West Coast. So people are coming over here, and what Keith just said, somebody's buying a house for $1.2 million for 1,200 square feet. When they come here and they got that same $1.2 million, they can spend half of that and get 3 times as much more, right? So that's what a lot of people are coming over here, and that's what's kind of pushing the housing market up over here as well, that I believe. Now let's go back to it, right? Consumer price indexes and interest rates. So when I say interest rates are what the Federal Reserve control. Now, what he does is the Federal Reserve, he's watching interest rates. As interest rates rise, he can raise interest. He can raise, and as inflation rises, CPI rises, the Federal Reserve can raise interest rates to combat inflation. Which one of the ways? What do you do to slow down interest rate? I mean, to slow down inflation, you raise interest rates. Why is that important? Because when everybody see this inflation, they're like, "Oh my God, the Federal Reserve may raise interest rates." Every 3 months, the Federal Reserve comes out and he speaks about the economy, the state of the economy, or whatever. If he sees interest rates if he sees inflation getting out of control, he may raise interest rates. And when he starts to raise interest rates, what is going to happen to asset classes? That's what we're going to talk about. So let's first thing we're going to do, we're going to go and look at the Bureau of Labor Statistics latest interest rate report on April. This came out a couple of days ago. I read it, but ladies and gentlemen, I've been pretty busy here getting some things knocked out. But right here, I have pulled up on your screen that I am sharing for the people that can watch it. This is the newest release from the Bureau of Labor Statistics, the U.S. Department of Labor. This is not what I heard, what somebody said, what somebody whatever. This is coming directly from the Bureau of Labor Statistics. This is BLS.gov. This is a report they put out every month called the Consumer Price Index for April. Right here, this was put out on May 12th at 8:30 a.m. Eastern. The Consumer Price Index for all urban customers, CPI-U, increased 0.8% in April on a seasonal adjusted basis after raising 0.6% in March, the U.S. Bureau of Labor Statistics reported today. Over the last 12 months, the all items index increased by 4.2% before seasonal adjustment. This is the largest 12-month increase since the 4.9% increase for the period of September 2008. So, September 2008, what was happening? Everybody knows that was the last, not the last, but that was one of our major market crashes before we had the pandemic come along. So they're saying, when they're looking at this, there's like, hey, the last time we had this increase of 4.9% was in 2008. So they're looking at 2008 numbers and today's numbers. So they're saying inflation is going up pretty high. The index for used cars and trucks rose 10% in April. This was the largest 1 month increase since the series began in 1953 and is accounted for over 1/3 of all items. Now they're saying people brought a bunch of used cars and trucks. Why did we have inflation rise 10% last month in used cars and trucks? I'm thinking people got money. People must went out there and brought things. I think that the demand increased pretty high, which pushed up the price. And when you see the price going up, because the demand is high, that's when you have problems. Look at the housing market, right? What's pushing the housing market up? We have very low interest rates. People have money. So since everybody have access to money, everybody's saying, hey, everybody's throwing money, trying to figure out ways to buy houses. And this person trying to buy a house. For prime example, when I bought my house, if interest rates were at 4 or 5%, I probably wouldn't be able to afford my house. But since the interest rates were lower, I was able to get into a house that I usually probably wouldn't have been able to afford. So guess what? When interest rates are low and you got all this stimulus money rolling around, you increase the demand for a particular product, good, or service. All right, let me see what y'all say in the comments. Keith said, that's a dream house, brother. See, Keith, you're from the Bay Area, but y'all have gotten accustomed to a $1,200, paying $1.2 million for $1,200 for a 1,200 square foot house. That is crazy. 1,200 square feet out here. That's almost like a little condo. And you probably can get that for about 200 range out here, but it's not the Bay. But out there in San Francisco, man, the cost of living is just crazy. Then if you take it to the South, you can get that for like 150. Take it to the South, you might get it for 150 or close to 100. Close to a little bit over 100 in the South. So, but hey, the Bay Area has always been high. Oh, you said it too. We got what's that? I'm making sure I read that right. Make sure I read that right. In New Jersey. It's at Hoboken, New Jersey. Prices aren't that much better. Man, that is crazy. New Jersey, that's kind of up towards New York. So you get those prices out there in New York, that New York area, the tri-state area. especially out on the West Coast, the LA's, the major hubs. The prices, home prices are just going just crazy out there. I don't get it. Why would you want to live there? Unless I had to live there where I was making some good money. Like if you're in the Bay Area and you're working for like a Uber or Facebook or Amazon, or you're in some big tech company and that's where you have to be to make the money, that's cool. But to be a lot of people in the Bay Area be driving Uber on the side, school teacher during the day, driving Uber at night, and then doing I don't know, delivering for Amazon on the weekend. You're doing all that. I'm like, what's so good about the Bay? The traffic, I've been there before, and the traffic is not. I mean, it's a nice city. I went out and saw the Golden Gate Bridge, but if I had, I don't get it. I do not get it. Dalen Brown said, when inflation goes up, does that help the cryptocurrency space? I'm going to say this right now. It's not enough study. Cryptocurrency's only been around for like a good decade. They've really been an entity. I think the cryptocurrency space is mostly ran off of speculation right now. I don't think it's any economical data. I think that every time I think the cryptocurrency market, in my belief, I think the cryptocurrency market is ran by anti-government. So people who are looking at the Federal Reserve and saying, man, they're pumping out too much money. We want a fiat currency. The world is coming to an end. They may look to crypto. Right now, when you look at the economical data, it doesn't do any suggestions for crypto. Crypto is very speculative. And yes, I do have some cryptocurrencies, but it's nothing crazy. It's very speculative. It's somebody can tweet something and watch the crypto market go up. So I think the cryptocurrency really, in my honest belief right now, I think the cryptocurrency is like an online casino. I think that's how most people that have cryptocurrency, this is their online casino / lottery ticket. Back in the day, you're not going to find anybody up on the 35 or 40, you're not going to find them at the local 7-Eleven buying a scratch off. Probably not going to happen. You're not going to find the local person at 7-Eleven. You're not going to find somebody under 35 or 40 going to buy a scratch off. You won't find them playing Cash 3, Cash 4, whatever those things are called. But you will see them online. They will go to a Coinbase or Crypto.com or Binance or whatever, and they will buy a random cryptocurrency because they heard somebody say it, and it's pretty cheap. So I think that right now, my 19-year-old nephew, he's probably never brought a lottery ticket a day in his life, but I probably would bet that he probably owns cryptocurrency. He's asked me about it, so he's probably going off and brought cryptocurrency. He's more likely to do that. He's not going to buy the traditional lottery, right? Julius Starr says time to buy Reits. Reits are a real estate investment trust. We're going to get into that later on into the show. All right. So, ladies and gentlemen, what you're looking at right now, this is from the Bureau of Labor Statistics, who track the Consumer Price Index, which is inflation. They put out the April report, and it's pretty much saying that inflation is rising. I wrote out a couple of key notes here. I did read this. If you want to read this for yourself, so you don't have to go to work or tell your friends what you heard. You tell them what you know. Right. So for prime example, it went up 0.8 in April, then it went up 0.6 in March. Now people are concerned, with used cars and trucks prices going up the most. Now people are wondering, why are people so scared of inflation? For the most part, inflation, you don't want to go in hyperinflation, and you don't want to go to de-inflation either, right? Hopefully I'm saying that right. Hopefully I'm not making an idiot of myself. So you don't want too much inflation, but you don't want no inflation. You want to kind of be gauging right there. When we see inflation rates rise, people are worried about interest rates going up. When interest rates go up, people right now that can afford my house, right now in Colorado, my house is valued at about $500,000, right? So when you look at right now, you have a group of people who can afford my house when interest rates are at 2%. If the government, the Federal Reserve, starts to raise interest rates, less and less people will be able to afford my house or any house, right? So people can afford less, because what you're doing, you raise interest rates, you're tightening up the money. When you tighten up the money, interest rates start to rise with stocks. That hurts future profits for companies. So people start to that can take people in the short term. I can see stocks going down. Like if you have paid attention for the last month, you've seen stocks just go down, 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 down. Why are you having that happen? You're having it happen because of what? People are scared of, hey, inflation is coming, and not only inflation coming, you have to look at as inflation is coming, people wonder about if our interest rates are going to rise. So now I get down to nitty gritty, Prince. You already gave us this big, long, boring lesson on inflation and consumer price index and showed us all this stuff. What does this mean to me? What does this mean to an investor? Right? Now let's get to it. Where am I at here? First thing is stocks. What does it mean for stocks? Does this mean stocks are going to rise? Stocks are going to go down? Things like that. Mostly in the short term, stocks will go down. But in the long run, stocks will benefit from inflation. Because guess what? If Coca-Cola, to make Coca-Cola, the price probably hasn't changed drastically. But the more a company can charge for their product or services without increasing their cost basis, the more money they make. For prime example, let's say if I make pens. See this pen right here? I make pens and it costs me 10 cents to make this pen, but I sell it to Walmart for $1. Nice little profit margin, right? Let's say inflation starts to go up and the prices of pens go up. If it still costs me 10 cents to make this pen, and now I can charge $1.25, I just put another quarter in my pocket per pen for nothing, just due to inflation. Naturally, it doesn't happen like that. Usually, it used to cost me 10 cents to make it, and it probably costs me 12 now, 13, 14, so on, because the raw materials prices will probably go up. But in theory, if companies like a Coca-Cola, it's the same sugar water and flavored sugar water, that's what Coca-Cola is. It's the same thing. Only thing it can do, it can raise its price by $1, 10 cents. Same thing with Clorox, the same thing with detergent, same thing with milk. They can just raise their prices. You know, I lived in Hawaii where a gallon of milk was, I don't know, like $7 almost when I was there. It might be $10, $11, $12 now. But some places were selling milk for, you know, those are high prices for a gallon of milk, right? So for prime example, people are wonder about that with stocks. So when I look at stocks, the first stocks I like to look at is what stocks can raise, what companies out there, it's an open question, which companies out there can raise their prices without people caring? I say it again, which companies out there can raise their prices and people wouldn't care? One thing I can look at is say Coca-Cola. Coca-Cola, which is KO, airlines. I think airline fares can raise, and I don't think people will I think airlines can raise their tickets by $20, $30. And I don't see people saying, oh my God, airline tickets have gone up $20, $30. I'm going to stop traveling. No, I think that people will absorb those costs and keep moving. Gas is another one. High paying dividend stocks, right? So right here, let's look at high paying dividend stocks. I have it pulled up on my screen here. Let's see if I can go to them. I'm going to share the screen. Okay, let's go to portfolio. Probably going to log me out. No, it didn't. Oh, yeah. Okay. Let's see if they got any good companies in here. So I'm looking at SPYD. I'm not over impressed with this one. Some of the companies they have in there, I'm not overly impressed. Dividend. Let me see. What's their dividend rate right here? What's their yield? I had it right there in front of my face. What is their yield? 3.96%. That's a month? That can't be a month, right? Let me double check this again. Y'all give me 1 second. I'm looking up the high dividend yield on the S&P 500. Okay, what is the yield? What is the yield on this thing? Okay, 4.66. Now, was that for? I gotta look a little bit further. I don't know. That said 4.66 in the long term, so I don't know. Anyway, ladies and gentlemen, you have stocks. So ask yourself, what companies out there? Let me close that off. What companies out there can raise their price and not have a problem? Let me see what y'all say in the comments. Case, what's going on, Case? Go around, applause for Case. Case Patterson. Up on the late night show, checking in. We got New Jersey in the house. We got the East Coast. We got We got the Bay Area. Chicago is in the building tonight. So we're heavy. So I believe Clorox can raise their price. I believe sodas, Coca-Cola can raise their price. I think food prices can go up. I also believe Southwest Airlines can go up. And most importantly, ladies and gentlemen, y'all know who I think is going to. Here's the gem. Y'all know who I think who's going to benefit the most from raising interest rates? Here we go. Bank stocks. I hit all these sound effects. I'm sorry, y'all. I got a little bored. I'm happy. Bank stocks. Bank stocks. Bank stocks. Here we go, right? XLF is the ETF. XLF is the financial industry. As interest rates go up, bank stocks will benefit. Let me type it in here. I'm going to pull it up for y'all to see. XLF. This is the financial sector. I think the financial sector will benefit from interest rates for obvious reasons. Who with rising interest rates, who can charge more for loaning out money? Who, when you go to buy that car on your credit card, who can lend? Who can charge you more money? Here we go. XLF. Y'all see this? Let's look at the portfolio XF. Let's look at the top holdings. Right here, they got Berkshire Hathaway, which is Warren Buffett. They got JP Morgan, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, Goldman Sachs, BlackRock, Charles Schwab, American Express. American Express in the last 3 months is up 21%. Charles Schwab in the last 3 months is up 25%. Wells Fargo in the last 3 months is up 40%. Goldman Sachs is up 20%. Let's take a look and see how has this ETF performed overall. Let's take a look at this snapshot. Let's pull up the chart. Let's go to the charts here. All right. Let's go year to date. So far this year, how has it done? So far this year, the S&P 500 is about up 10%. NASDAQ is getting beat up all over the place. NASDAQ is only up 5%. Dow Jones, I think it's probably about 10% too. Yeah, it's about 10, 11% for the Dow Jones. But look at the XLE. So right here you can see the little purple line is the S&P 500. That's the top 500 companies in America so far this year. You can see it's up about 10%. But look at the financial industry. It's up about 28%. Ladies and gentlemen, 28% banks, the financial industry. Those companies you just heard me say, Citigroup, Goldman Sachs, Morgan Stanley, Berkshire Hathaway, those are financial companies, right? Financial companies, this is not a get rich place. This is a place where you stay rich. So you're looking at these financial companies having a great year so far, doubling the performance of the S&P 500. And I believe that, look at them on Friday, they went up 1.58%. I think a lot of it, this is where people are going to benefit the most. Bank stocks. XLF is the ETF that tracks them and looking inside their portfolio, because we know banks make their money off of interest. I go swipe my credit card, I pay interest. I go to buy my house, I pay interest. I go to buy a used car or a new car, I pay interest. I go borrow money to send my son to college, pay some type of interest. If I borrow money, y'all get the drift. Or you can go read Wesley Learns About Credit, a children's book introducing kids into the world of credit. Wesley Learns About Credit. You can go check that out on Amazon, hardcover, paperback, ebook, and audio, wherever you may catch it around. Great way to introduce kids into the world and adults into credit. Shameless plug there. Wesley Learns to Invest. Thank y'all for all supporting that product and the whole Wesley Learn series. So anyway, ladies and gentlemen, there you go with stocks. Ask yourself what companies out there can raise their prices without people caring too much. I think household goods index, that's going to be the Dow Jones. So I look at investing into the Dow Jones. Also, I'll look into XLF, the financial industry. And then I will look at, you got gold that's in there. The gold ETF GLD. I'm not too crazy about gold. I don't like the performance of gold when it comes down to hedging. It hasn't really benefited me a whole lot over the years, so I'm not crazy about that. But it's there. It's one way to hedge. Ooh, I almost forgot one. That's stocks. Now let's get to the next one I really want to talk about. Somebody asked me earlier, I think that was Julius out there in New Jersey, said, Prince, what about Reits? For people who's not familiar with Reits are real estate investment trusts. Real estate investment trust. This is a way you can invest into real estate on the stock market. You put your money into a pile of money. They take your money. They go out and rent buildings to Target. Some of them rent buildings to Walmart, Home Depot. So a lot of places like Target and Home Depot, those places are owned by real estate investment trusts that rent those places out. And when they rent those places out, you get a dividend check. I think it's over 70%. I need to study that again. I think it's 70% of the assets are real. 70% of everything held by a REIT must be invested into real estate, and 90% of its dividends must be paid out to investors. So I'm, hopefully I got that correct. Hopefully I didn't screw that up. But that's kind of the structure of most real estate investment trusts. We've had the real estate investment guru, the god, Mr. Brad Thomas. He's been on the show. I need to get him back on here. But the thing I didn't like about REITs, when the market started to go down last year, when the pandemic really started to get a grip on us, and I was looking at real estate investment trusts, I said, well, let me see if real estate is going to be around. Real estate, if you notice, the real estate market wasn't affected. The real estate market really wasn't affected. And the reason why is stocks act immediate. It takes a while for the real estate market to react. So if President Biden, God forbid this happen, if he gets assassinated tomorrow morning, stocks would immediately drop. Immediately. It's happened when John F. Kennedy was assassinated. I forgot all the presidents that were assassinated back when the stock market was alive. Any type of uncertainty, stocks act immediately. They're very volatile. They act immediately to any type of news. It takes real estate a while to catch on to that. The thing I didn't like about REITs were as soon as stocks dropped, the REITs dropped. REITs stopped paying dividends. The REITs were falling through the floor. And I said, why are they dropping when the real estate market is kind of holding steady? Actually started to uptick. So REITs are very sensitive to stock movement. That's why I wasn't too crazy about it. I used to be heavy into them. So, it's a way to diversify. But when I started to pay attention to REITs were not giving me the performance of when the stock market went down. So did REITs, real estate investment trusts. I said, well, I want to diversify my exposure away from stocks and get into real estate. I don't want y'all to be connected like that. So with real estate, I'm more of a fan of real estate. For prime example, y'all heard me say on the show, vacant land. Vacant land. When you look at vacant land is so disrespected. Vacant land and Apple are probably like the two most disrespected asset classes right now. And what I mean by vacant land, you take Colorado, you take Denver. I'm not talking about going downtown and let's say Keith, they said Keith is still on. He's out there in the Bay Area in San Francisco. He said that his next door neighbor house just sold for $1.2 million and it's 1,200 square feet. You take that person, and if they were to go get vacant land in northern California, where it's pretty vacant and rural, they can probably afford land. Anybody can buy land these days anywhere. You can buy land in Mississippi online. You can buy land in Georgia online, Tennessee online. No more of the days people used to only buy and rent in about a 50, 100-mile radius so they can go check on the property, see the property or whatever. Right now, you guys and girls can go pick up your phone and say land for sale in Texas. Google land for sale in Tennessee. Land for sale in Colorado. Land for sale in Kansas City. Land for sale in Missouri. Land for sale in all these little spacey rural areas. Land for sale in Illinois. Chicago. I know we got somebody tuning in for Chicago. I'm not talking about buying land downtown Chicago, but look on the rest of Illinois. I'm in Texas. I'm not talking about buying land in Houston, Austin, Dallas, What's the other big area? San Antonio. Not those big urban areas, but that space between Dallas and Houston. Look at all that random land. That land there, the price is just going to have to go up as inflation goes up. As inflation rises, just the price of everything going to go up. They're not making no more land. Y'all always heard that. But the price is just going to naturally have to go up. Land is more valuable than a house. With land, I can go live on it. I can take an RV. I can live on it with an RV. I can grow vegetables. I can grow food off of it. I can live on it. I can grow products and sell products. I can throw cows out there and get milk and get a tax break. With my house, yeah, it's great for keeping me warm, keeping a roof over my head. But when you look at what you can do with land, you actually can do more with land than you can with a house. But that's my only discrepancy with REITs, real estate investment trusts. They're so sensitive to stock movements. When the stock market goes down, look at the last year pandemic. I was there heads on. I was right here live when all that stuff was happening. And when I saw all of that, I saw the stock market crashing, right? You know, when I saw the stock market crashing, I saw REITs track crashing. But when you looked at real estate, I was in the housing market. I was looking for a house at the time. The housing market was still a seller's market. I thought it would be declining and falling off. No, it wasn't happening like that. So I look at, if I want to diversify away from you, I don't want y'all to correlate. That's the word. That's the fancy investment word, where they correlate with each other. Stocks and REITs correlate too funny. I don't like to see them going down. Then REITs stop paying dividends. Then price started to go down. Then REITs started doing, why is that happening? I want you to be diversified away from certain things. So if I was diversifying, trying to get into housing and land, I would go online and you can buy land for $1,000, $2,000, $3,000. It may not be the best piece of land, but look all out there in Arizona. There's all type of dust land in Arizona. It's all type of dust land out here in Colorado and Georgia. Random places of just fields that you drive by going somewhere. That's what y'all say in the comments. Keith said, I brought a plot 3 years ago for $20,000, sold it for $60 last summer. So it's a great investment. Congratulations, Keith. That's what I'm talking about. Let me cue up my sounds here. Keith out here making power moves, ain't tell nobody. What's going on, Keith? Congratulations, man. Congratulations, Keith. He said he bought a piece of land for 20. He bought a plot 3 years ago for 20,000, sold it for 60,000. That's nice. Now, Uncle Terry says, which stocks and asset class will benefit from inflation? XL, we just went over that one. Uncle Terry, thank you for tuning in, Uncle Terry. I don't think I've so right now, Uncle Terry, we talk. One of the asset classes going to benefit the most is land and houses. Also, when you look at the stock sector, you're going to look at the financial sector, XLF. We just went through XLF, how they are up 28% right now versus the S&P 500, which is only up 10%. So bank stocks, things like Bank of America, Goldman Sachs, Wells Fargo, those companies are having a great year. Those are ones that benefit as inflation goes up. Interest rates will probably go up to combat inflation rising. When interest rates go up, that's when companies who benefit from interest rates are companies like your financial sector. So XLF is the sector. XLF is the sector. And then you're looking at bank stocks on the inside, right? You're looking at bank stocks like Bank of America, Wells Fargo. If you don't want to pick one, you pick the whole sector, XLF. If you want to get risky with it, then you can break it down to Wells Fargo. You can look in the Bank of America. Now, ladies and gentlemen, this is a financial education show. We're not telling anybody what to buy, how to live their life. We're just giving some things to look up. All right. Now, Keith said cheap land all over the South. You're right. I'm from Georgia. My house here is $500,000. If I was to get a $500,000 house in Georgia, I would have a plantation. But here in Colorado, I have a nice suburban home. But down in Georgia, I'd have had a plantation with 3-4 horses, big old gate, all that type of stuff, right? If I went back to where I'm from. So don't get outside of your area. Now you have companies like Roofstock. Who's heard of Roofstock? Roofstock, their CEO, I need to get him back on the show. Gary. What is Gary last name? Gary. I can't think of his last name, but he's the CEO over there at Rootstock. At least he was. We came onto the show. He's allowing you to buy stocks. He's allowing you to buy houses like stocks that are already being rented out. So when I look at a REIT, a real estate investment trust, I got to get online, buy a stock or whatever. But if I can go into a place like a Rootstock, this is not sponsored or anything. This is just my thought process. If I can go online, they say, Prince, we got this house down in Mississippi that costs $100,000 that's being rented already. You're going to make, after you pay the mortgage, you're going to make $200 a month. I'm going to be more, because I said, okay, if I buy a house, it can go up in value so I can gain some possible equity. And I'm getting a positive cash flow. And now it is an asset that I can use to do something else with as collateral, whatever. That's what I meant to say about land. Land, I brought my son land when he was, 10 years old. I'm getting letters every day in the mail about, hey, we want to buy your land. We want to buy your land. 10 years from now, my son can live on that land. He can grow food on that land. He can grow a cattle on that land. Or he can take that land and use it as collateral to get a business loan. So many options that he can do with that particular land that's paid off. The average American can't buy a house cash. Most can't. Some can. Majority of people can't. Not everyday people, right? So what I learned, if you live in a very, very big urban area, if you live in New Jersey, if you live in Chicago, if you're living in San Francisco, you're making that big money in San Francisco, you're making that big money in Chicago, you're probably making big money in New Jersey. Stop looking at your local area. A $1.2 million, 1,200 square, that's crazy. Look into other areas where your money is going to go further. Tori Williams, what's going on, Tori Williams? He says, great show. Congratulations, Tori Williams. What I'm saying, I'm going to say thank you, Tori Williams. So if you're up there in New York and you're making $100,000 a year in New York, that's okay money in New York City. $100,000 a year and you're in San Francisco, that's okay money. So look to diversify away. You can buy a house in Mississippi for $100,000. You can buy a decent house in places in Georgia for $150,000. $300,000 is a very nice house in Savannah, Georgia. $400,000, that's a very nice house in Savannah, Georgia. Texas, look at places over Texas. You got places down there in Texas. Colorado is not too bad, but I will say outside of Denver, you don't really see too much outside of it. But diversify away. Look for areas like Nebraska, land for sale in Nebraska. Look at for land, those are the ways, and those prices are gradually going to go up. So I look at bank stocks, I look at the financial industry that's going to benefit, and I look at land, vacant land, just land. I don't have to do nothing to it but pay property tax. I pay the property tax and I'm done. I don't have to go out there and cut the grass. I don't have to go out there and worry about the HOA. I don't have to go out there and worry about, oh my God, somebody's sleeping on my land. Somebody drove a car on my land. I don't care. It's just wilderness land that's out there. That the price, as inflation and the price of goods and services start to go up, they have to go up. Right? But anyway, ladies and gentlemen, that's going to conclude today's topic and episode. Hopefully y'all enjoyed this late night show for everybody that tuned in across the country. Now we're going to do a quick recap before we roll out of here. We talked about what was inflation. Inflation is the price of goods and services that go up over time. You heard the people say, oh, my Coca-Cola, my candy, gasoline costs so much. Grandparents said gasoline was 2 cents back when I was a gallon when I was a kid. Why are they $3 now? Because inflation. Now, inflation is a good thing because you need it to gradually go up, but you don't want it to go up. You don't want to go super high inflation where you weren't running to when your money's becoming more and more worthless as it go up. And you don't want de-inflation where nothing is going up and prices are actually dropping and dropping and dropping. So you want a nice little push. And since we got the strongest military, shouts out to all the veterans and military people out there. Since we got the strongest military, we can make whatever we want to do out of our economy. We can say whatever price we want to say, and the rest of the world got to listen to us because we got the strongest military. Now we talked about the CPI. Why is the CPI? What is the CPI? CPI is the economical word for inflation. This is the consumer price index that is reported on every month by the Bureau of Labor Statistics. Now, why do people care about it? Because CPI has a direct correlation to interest rates. If CPI, if consumer price index goes up, inflation keeps increasing up, then the Federal Reserve is probably going to go in to combat that. They're going to raise inflation, not raise inflation, raise interest rates. They're going to raise interest rates to cool off inflation. If they do that, when they raise interest rates, my house right now, I wouldn't have been able to afford if interest rate was 4%. If the interest rate was 4%, I would have been like, "Oh, that's out of my price range." If the interest rate had been 10%, my dad brought his house back in. My dad had a house built that I grew up in back in 1995, and he said, "Son, I got a 9% interest rate, and I was happy to get it." Back in 95, he's like, 9%, man, that was a good rate, because I wasn't in the double digit. That was an excellent rate, so I took it. That was his original interest rate. So if the interest rates right now for houses was 9%, what would you be able to afford? A lot of houses will become unaffordable. So as interest rates go up, it tightens up the money in the economy, and it slows up money, and it makes things more expensive to buy. When you go to borrow, money is harder to borrow. If you do borrow, you get a higher interest rate. So that's what people are concerned about the CPI. Interest rates effect on stocks. Short term, it affects stocks hard, like you've seen in the last couple months. You've seen stocks go down and get hurt. But in the long run, stocks benefit from higher inflation because they can charge more for goods and services. And like I use this analogy, if I was a company and I made pens, it cost me 10 cents to make this pen, and I sold it for $1. And then the price of the pens go up. Now I can sell them for $1.25. I'm making more and more money. So companies can charge more for their goods or services. So when I look at stocks, if interest rates increase, you're looking at the bank sector that's going to benefit from rising interest rates. And also you're going to look at who else is going to benefit? Companies that can raise their price of goods and services that people don't care. Clorox bleach can raise their prices. People don't care. Coca-Cola can raise its prices. People don't care. Airline industry, people can, they don't mind paying more for plane tickets. If they raise the ticket price about $20 tonight, I don't think nobody would notice or even care. They're still going to go to Vegas. They're still going to go to LA. They're still going to travel. That's not enough to deter people from flying or doing whatever. Houses and land, right? Houses and land. When I look at houses are going to benefit. Real estate is going to benefit from rising interest rates. Now, my only concern with the housing market is when they start to uptick, if we have inflation going up, if they raise interest rates, it's going to make houses more unaffordable, which is going to cool down the demand. So I kind of skipped over this too. What caused all this rise of inflation is we pumped trillions of dollars into the economy. We lowered the interest rates, so that pent up a lot of demand. We kept the same supply, but the demand for a house all of a sudden started to increase. So when people have more money, that increases the demand for goods and services. If supply stays the same, good old economics 101, prices go up. So you're looking at the prices of houses go up and land. Land, for example, you don't have to pay for land, which you don't have to do for land. I meant to say, ladies and gentlemen, for land, you don't have to pay for, oh my God, what I'm trying to look for, the word I'm looking for here. For land, you don't interest rates. Most people buy land with cash, or people buy land with money they already have saved or whatever. So land, interest rates on land, unless you're talking about major land, but like little vacant spots or whatever that cost $2,000, $3,000, $4,000, it doesn't hurt you that much. So if you live in a big city like a Chicago or New York or LA, you're making good money, you have a large disposable income. Instead of looking in your city where prices are super high, go to cheap areas. You have the internet now. Go to cheap areas. Go to cheap areas like Georgia and Louisiana, Mississippi, Alabama, even desolate places around Colorado, Nebraska. Look outside of your area if you live in a high cost area. If you live in the South, if you live in a South where it's a low cost area, look around you, because if you go outside, your money's not going to go that far. All right. And also you got gold is another one. We didn't hit on it a lot, but that's another way you can hedge inflation as well. All right, ladies and gentlemen, I hope y'all loved this episode. Hopefully y'all liked it. Hopefully y'all got something away from it. The most random show online. Best financial podcast out there. Don't forget to hit that like, subscribe, comment, share button. Thank y'all for rocking with me for over 8 years now. Been doing this way before it came cool. Now it's very cool. Everybody's on the internet. Everybody's doing it now. But that's fine. Shouts out to them. Congratulations to all those people. But thank y'all for rocking with me for the years and years and years. I hope y'all get some time this podcast. Hopefully y'all love it. Don't forget to tell your friends, your cousins, your families, and everything. Tell them about the Investor Show. Tell them it's a goofy guy that looks like me called Prince Dykes. But until the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe, my name is Prince Dykes. This is the Investor Show. Peace. Be safe. I'm out, and thank you.